After yesterday's massive sell off, we had a little bit better of a day today. We saw the market bounce. We saw Tesla basically close flat. Amazon was actually green. Apple was green. Overall, not too bad. But what we're going to cover in this video is if I think that the sell off that's currently happening in the market is going to be sustained. We're going to talk about a couple of stocks that I'm going to continue to watch. We're going to update on some positions that I'm currently holding, such as AMD. And we're going to go over a couple of small cap stocks like SoFi, Carvana, Kava, GME, because I sadly think that the rallies for most of those stocks are over short term. Starting first with Tesla, zoomed out to the weekly chart. You can see that we ended up having our breakout that we were initially talking about back in June. We have covered this extensively on this channel for weeks and basically for months at this point. And since we're over this all-time high of $417, price has pulled back only within the past couple of days. You can see our trading bot tried to time the breakout back here on the 26th when the BX flipped green, failing for a small win. Trading bot ends up hitting here on December 3rd, and from December 3rd to the bot's exit was about a 31% move within 1 week and 6 days. Since then, the BX has flipped back to red. You can see now 2 sessions in a row that the BX is showing red, and this is a sign that short-term money is being pulled out of this. And obviously that's the case since we saw such an aggressive sell-off in the past couple of days. Now, in most cases, when the BX flips from green to red, price is usually going to consolidate for multiple days or weeks, as we saw back here in November, as well as October. But this, in my opinion, is not a time to short. In a perfect world, what we are looking for is price to be trending upwards with bullish accumulation on the BX trender. That's why we took these 2 plays over the past couple of weeks, as well as this trade here from November 5th up until November 11th. This is the optimal environment for us to be trading any asset, including Tesla, to the upside. Now, during these times where we are over this market bias or this trend, but the BX is red, that is not a time to short. That is a time for us to focus on exiting our long positions and waiting for bullish accumulation to happen once again. There will be times that we will look to short stocks, but in order for that to happen, we must be downtrending, making lower highs into lower lows. This is a better environment for shorting. And so for anybody who is looking to make a quick buck trying to short a stock like Tesla, I'm telling you that when I implemented this one thing, I never shorted something that was in an uptrend. It changed my career forever. And so I do believe that the short-term rally for Tesla is sadly over. But what I think is most likely going to happen is that price is going to consolidate anywhere between $490 high down to that $400 support. And I feel that we will probably consolidate within this range until we bounce off of this market bias support or this $400 support. And I think from there, as long as this weekly chart can continue to show green on the BX trender, that we should see a continued rally into Q1 2025. Now, if that $400 level was broken, then what we would want to do is find out where our institutional buy level is. The way that we find an institutional buy level is by first looking at the most recent lows. We have a low here of $213, another pullback and low here of $242, another one at $310, and a more recent one at $331. The fact that we are making higher lows is a sign that we have a bullish market structure, which is good. Now what we want to do is focus really only on the most recent low, which is going to be back here at $331. If we take a Fibonacci retracement from that low of $331 up to this high of $480, you are going to notice that the area of interest, the main area that we want to focus on, is this 0.618 Fibonacci level to the 0.786 Fibonacci level. This area is called our institutional buy range. And the area right below that, from the 0.786 to the 0.826, is called our smart money zone. These 2 areas are very important because it's basically saying that from that low of $332 to the most recent high of $480, this is a 60 to 70% discounted range, and that little purple area is actually an 80% discounted range. And as you guys know, institutions are the ones who can actually move the stock higher. And so all of the institutions who are buying basically between $360 and $320 are, of course, not going to continue to buy around $460 and $470. They are going to want to pay a discounted price, which is normally why price will consolidate here for a little bit, and then worst case, continue to sell off until big money and institutions believe that Tesla is at enough of a discount to buy the dip. And so in this case, I would not be looking to short. Instead, what I would be looking to do, and what I am personally doing, is waiting for Tesla to continue to pull back, finding that institutional bottom, waiting for the daily BX to flip, continue to monitor the weekly BX, and play the current trend. Once that is no longer there, and once we break something like $325 or the weekly BX flips red, then I will remove a bulk of my long calls on Tesla. AMD is down another 2%, and I'm still holding my February calls for this. And unfortunately, it does look like I'm going to get tagged out of this and most likely sell at probably the worst time. And what we're going to do in this is go over why I'm going to stop out, even though I think it's going to bounce. A lot of it's going to have to do with risk management. And then from there, we're going to talk about 2025 and my price targets, because so far, everything that we have been focusing on is still in play. This institutional level that we're looking at, still in play. Smart money level, still in play. The only issue is that the past couple of times that we have tried to time the bottom, we have taken losses. And as you guys know, I am okay as a professional to have losses. I only have a 64% win rate. If it means that when I win, I'm going to get an outsized return for the actual risk I have to take on. Now, looking at AMD, I want you to first zoom out to a weekly chart. Whether you're someone who is a day trader, a swing trader, or even a long-term investor, you should always be focusing on the weekly chart. It is the strongest chart, it is the slowest chart, and it's going to help you get an understanding of what the current market situation is like for that stock. The first thing that I tell any of my students to do is to zoom out to that chart and then start looking for structure. We want to know the three current things. What is the trend? What is the structure? And what is the mode? And then from there, we want to understand buying pressure. The way that we can tell what the structure of this is by taking all of our most recent lows, and you're going to see that if we take all of these, that we're making higher lows. This is a good sign because it means that structure is bullish. If structure instead is making lower highs like we were doing back here in 2022, as well as lower lows, well, that is bearish market structure, which is not good, obviously. Now, what we want to do at this point, now that we understand structure is bullish, is we want to look at the most recent market structure, and we want to understand if we're buying in an overpriced level or if we're getting a discount. The way that we do this is by taking a Fibonacci retracement from our swing low of $95.45 up to the most recent swing high back here on March 4th, 2024 of $207. And if we pull that all the way out, you will notice that the 0.618 to the 0.786, which I've marked off in blue, is currently our institutional buy zone. And the 0.826, which is that purple level down below, is our smart money zone. If you want to learn how to draw these in less than 30 minutes, take our Smart Money Zone course. The link is going to be in the description in our free course library. If we are buying within this blue area, this means that we're getting anywhere between a 62% to 78% discount. This is normally going to be where institutions enter. And you can see that they actually entered back here on July 29th, and the stock bounced drastically. We actually bounced from that support and ran all the way back up 40% to $171. Now, as we talked about market structure to the upside when we were marking off all of our lows, they were making higher lows. But if we mark off all of our highs on AMD, you will notice that we are actually making lower highs. Now, this isn't necessarily bearish, but it does show you that institutions are not stepping in to push the stock higher. And this could have been our first potential sign of rejection. The same way that we isolated this low to this high and then took our Fibonacci and found our institutional buy and smart money levels, we could do the same thing for even smaller sections of the market. For instance, from this high to this low, if we were to pull our Fibonacci retracement down, you will notice that the area price rejects at, coincidentally, is the institutional sell level, which is the 0.618 to the 0.786. You have to remember that the only people who can move the market is institutions, and institutions do not move unless they're getting a discount. And so even though I will probably take a small loss on AMD, in this case, probably about like $75,000, I still think that there is a huge chance that in the next 12 to 24 months, the price is going to move its way back up at least to maybe 155 or 160. And if we can take that old high out back in October of 170, then I think into 2025, we can move our way up to $220. If this weekly BX closes like this, I will look to stop out of my position. If the daily also continues to sell off, then I will make sure that I close out my position. And if you look at all of the hits that our trading bot has tried to take on this in the past couple of weeks, you'll notice that we have 3 losses. AMD is one of the biggest losers that I've had so far this year. But at the end of the day, it's not the end of the world. I mean, you can look here. Our first hit on this position was a small loss, basically, of a flat trade. We ended up entering right around 139.36 and then closed out at about 137.37. The next position entered here at $143, and this one we did take about an 8% loss to the downside. Price continues to sell off, BX turns green, showing us a sign of strength, only to take once again another 8% loss. So, okay, in the past couple of weeks, that's a 10% loss. But if we're able to time this bottom within the smart money zone, then as we said, worst case scenario, we will make 35% to 78%. So I am more than willing to take a 10% loss to make anywhere between a 35% to maybe 100% return in the next 3 to 12 months. Tesla was the same exact way. Moving on to NVIDIA, I am still bearish short term, and I do think that we will find a support somewhere around $120, which is going to be the level that I'm looking to enter at. Now you can see that the last 3 times that the BX has flipped from red to green, price has sold off drastically into this trend support level. And that's why basically since all the way back here, on November 11th, we have been bearish on that flip. And in most cases, what will happen is price will sell back off, as we know, into our support level. In this case, this would line up with that $120 trend level. And what we'll look for at this point is a bounce off of this support level and then a flip on the BX trender. Now, if we zoom into the daily chart, you guys know that we've also been tracking a bearish candlestick pattern, which has been happening here since the beginning of October. We have what's called a head and shoulders pattern, which is when price makes a high, pulls back to a support level, in this case 130 to 132. Price makes a higher high, pulls back down into equal lows, pushes again, but instead of making a higher high, makes a lower high before selling off, breaking our neckline, which is the support level here of $130, and then selling off, in this case, into $120. Now, I know that a lot of people have been looking to go long on NVIDIA, and I've been saying that the best case is waiting for $120. That's where our longer term institutional support range is, and our smart money zone is sitting at $110. But there is a case that doesn't happen, and this bounces early. The BX has flipped green here, which is a good sign, but in my opinion, I think the best case scenario for this is that price is most likely going to bounce up to 140 before catching retail once again and plunging the stock back down to 120. If I was personally trading this with my fund, what I would look to do is sell cash secured puts each and every single week down into $120 until the weekly BX flips green. What this will allow me to do is basically either get filled at $120 if those cash secured puts get stuck. And if that's not the case and price bounces, then at the very least, I can make a couple percent return each and every single week in premiums. But to be safe, I would wait for confirmation and wait for the weekly to turn green. Now, you guys know that we have been very, very bullish on Bitcoin. Basically, Bitcoin and Tesla have been our biggest trades in the past couple of months, which is what gave us this massive push from basically the beginning of November until right now. The reason that we were initially bullish on Bitcoin back in September is because we saw this strong bull flag pattern and price was pulling its way back down into this $55,000 support. Now, once we have a liquidity level or a support level like this, there's a very good chance that price is going to bounce if we get bullish accumulation on the weekly BX. And so what we're looking for is this BX trender, which is the indicator with this line down the middle, to flip from red to green. This flip from red to green is an indication that buyers are stepping into the market. From that point, you can see Bitcoin ran from $54,000 to highs of $108,000, which is about a 97% move in 3 months. Now, this weekly candle closure has not happened yet. This candle is showing a red BX, but this candle does not close for another couple of days. That being said, if this candle closes red like this, I think that there is a very high chance that Bitcoin could significantly sell off. Now, as far as an area to sell back off to, what we're going to do at this point is turn on our market bias. This is a free indicator that we have a course on down in our free course library that shows areas of discounted range to buy within an uptrend. And so what we're normally looking to do is to buy Bitcoin when it's within this market bias level. And so you can see that if this is the top, price will most likely sell its way off to worst case $74,000 or $80,000. And I think that from there, that's when we would see institutions step back in once again to drive price back up into higher highs in 2025. Now, as we said, the weekly candle has not confirmed a closure yet. So as of now, I remain bullish for the next couple of days. Now, this moves into us talking about MSTR because MSTR was one of those stocks that we were actually calling out way back in September when we saw a massive amount of unusual options flow come through. And the worst thing is that even though I did very well trading crypto, I sold these calls way too soon. We saw the same setup happening here on MSTR that we saw on Bitcoin. The X trender flipped from red to green. Our entry trigger would have been right here at $117.71. From those lows all the way up to highs was a 362% return within 2 months and 1 week. What's insane is that we followed an unusual options flow that was worth $70 million. So I can only imagine how much money that person made. Since that run, you can see that MSTR's BX trender has flipped red as of November 25th. Now, if we move into the daily chart, you're going to see on November 25th, the price hit 440, sold back off, and continued to make higher lows. Now, I thought the entire time that this was going to be what's called a bull trap. Now, normally the way that happens is the weekly chart turns red, but the daily is setting up like a potential breakout. We will make higher lows, just like we were doing here, and normally make equal highs. In most cases, this is a sign of a continuation breakout. But remember, we know that the weekly BX is red. We know that on the bigger time frame, there's not enough money coming into this to continue to push it up. And so the best case scenario is that I was expecting price to push back into 490 before selling off to fill this gap at $280. And unfortunately, it seems like the latter is going to happen. Now, as far as potential support levels for MSTR, the way that we can find the institutional level is what we normally do. Mark off our low, mark off the high, and then take a Fibonacci from those areas. The main areas that we want to mark off and watch is first the 0.618 Fibonacci down to the 0.786. And then the best area is the 0.786 down to the 0.826. So now we have areas of discounted range that we can look to potentially open long-term positions in. And so what I will normally do in this case is move into a smaller time frame, such as a 4-hour or a 1-hour, to find those potential entries when that BX flips. In this case, though, I do think that MSTR is going to continue to sell off even further, most likely $300 to worst case $280 before we confirm a bottom. In yesterday's video, we talked about CleanSpark and we went over while we were inside of our institutional buying zone as well as our smart money zone. Last time that we pulled back into that deep of a discount, price broke out 82% within 1 week and 3 days. Now, we decided to go long yesterday because even though we saw a consistent sell-off here, the BX was still holding green. And what we're looking for is this line specifically in the middle. Today, price sold off aggressively, breaking that $11 level, so I closed out my position for a loss. Now, even though that I closed out the trade doesn't mean that I think that this whole setup is dead in the water. Of course not. My goal was to manage my risk by closing out that position and waiting for a confirmation of a bounce. Worst case scenario from here, CleanSpark continues to sell off and I don't lose any more. Best case scenario, CleanSpark bounces, the BX turns green, I re-enter somewhere around 12, and then we can play the breakout up to $18 over the next couple of months. Now we're going to talk about some small cap setups that I think are unfortunately hitting a top. Those four are going to be SoFi, Carvana, GameStop, and Kava. These are actually all three positions that we called out and that we were bullish on for the past couple of months that are now, number one, either way above our price target, or number two, showing weakness on the bigger time frame. Now, we were very, very bullish on SoFi basically since July into September, and unfortunately, I never got to take this position. The reason is because what we were looking for is this swing low back in May of 2023 up to that swing high in July of 2023. And you guys know that normally I'm looking for price to pull back into the smart money zone before I go long. And you can see that my stingy ass basically couldn't just go long at $6. I wanted $5.70. And you know what? Because I wouldn't just take that extra 6%, I missed out on nearly 180%. Makes sense, right? But in all reality, this SoFi breakout was absolute perfection. We had a descending wedge, which happens when price is making lower highs, but also making higher lows. We saw this breakout from August 5th. The weekly BX turned green on August 19th, and then price has been breaking out ever since. Something to note though is that back on December 2nd, we had our BX turn red, which is normally a sign of a potential top. The next week, we ended up closing green, and then this week, we actually hit highs of $17.20, actually pushing into a higher high, which is normally something that we don't see in this type of trap. Now, the thing that I just really don't like here, and the sign that money is leaving, is the fact that the weekly is still red, but now the daily has also turned red. And while there might be a couple of bounces, maybe to test $16 once again, I unfortunately believe that price is most likely going to continue to sell its way off back down to $13 and $12 in the coming weeks. The same exact setup happened with Carvana. You guys know that market structure is bullish, looking very, very good. I wouldn't really ever look to short anything like this, but we know that when we have this type of structure and the BX flips from green to red, which is this oscillator down here showing us buying and selling pressure, that it's normally a sign that price will pull back into the trend line before making a higher high. And so in the case here with Carvana, you're going to see that we had this bounce off of the $128 support. The BX turns green, and from there, price ran about 81% in 2 months. Well, if we look back here on the 25th of November, the BX actually flipped red, which is our indication that price is most likely going to continue to sell its way off into a support level, which is exactly what happened. Now, in this time, price did try to test a potential breakout over 262. But now you can see why we would have wanted to exit at the end of November. In my opinion, I think that CVNA is going to continue to pull back anywhere between $200 and $190, and I would not look to go long when the BX flips once again from red to green. GameStop is one of those positions that we called out back in November. The reason for this is we were making lower highs into a fixed point as well as higher lows into a fixed point. And this is a sign of compression or a sign of a squeeze. And normally what will happen when we're making this type of squeeze inside of an uptrend or a bullish market is that we'll see a potential breakout. Now, we look for this indicator at the bottom of your screen, which some of you know is called the BX trender, and we want to see a flip from red to green while we're right inside of this area of compression. This is going to tell us if buyers are coming into the market to push the stock up or if sellers are coming in to drive the stock down. You're going to see that buyers stepped in, flipped the BX, and from lows to high, we ran about 54%. But buyers did not continue to step in to push the stock through 30. And back here on December 9th, the BX flipped to red, which is usually a sign that price is going to pull back or at least cool off for the next couple of weeks. If we zoom into the daily chart, you can see that price did pull back into a support and bounced, but because there is not enough buying pressure happening on the bigger time frame, we are unable to push through $30. Now, I'm not personally trading this, but I do still like this setup on GameStop, and I like the fact that we're continuing to move our way up. What I would expect to happen here is for price to most likely pull its way back down to worst case $25, $23, or $22.50 before breaking our way back up into an equal high around $35. But that being said, I don't think that there is enough buyers stepping in on this bigger time frame in order to push GameStop up above $30 within the next couple of weeks. I hope this video helped, guys. I know that this week has been very tough, and for me, it's also been very tough, right? Especially on our smaller accounts. My 50K challenge has literally lost the past 4 days in a row. But that's how trading goes sometimes. And we talked a lot about this in yesterday's video, but on a day or a week where the entire market is down, the S&P 500 drops 2.7%, and you lose money because of that, it's not necessarily a bad thing, because what would be bad is if everybody made money, but we lost money. That would be a sign that our strategy is fundamentally flawed. And we know that we're going to have winning and losing months. And if you're somebody who's new that's been following me, I promise you're going to see me win and you're going to see me lose. But what I'm the most proud about is when I lose consecutively, but then you guys get to watch me make it all back and then some. I talked about this in yesterday's video, but January, we started off red. We lost $30,000. From January to July, we made $1.4 million. From highs in July, we were up 1.6 million to lows in August of 1 million. So that is about a 33% drawdown on profits and about $600,000 from high to low. From there, we went all the way back up to 1.6 million in November, which of course is amazing. But remember, from a net delta standpoint, I really didn't make any money from July to the end of November. And then basically from the end of November, we went from 1.8 million up to 2.7 million, up to 4.2 million. And a huge portion of that, of course, was Tesla and Bitcoin. But the point that I want you to understand is that I still lose regularly, but it doesn't matter. That's just a part of the game, and it's a part of doing business. As always, guys, thank you for all of your support. I hope you have a great day. Check out all of our free resources. We have 10 plus courses going over everything that I've learned in my decade of trading and exactly the strategy that I've used to make over $4.2 million this year. And if you want to get access to each and every single trade that I take live, as well as join my private mentorship group, we still have some spots open going into 2025. The link to that will be down in the description. You can use the code MARKET30 to get 70% off your first month. Thank you guys for all support. It truly means the world to me, and I'll see you tomorrow.